the most anticipated earnings releases for the week beginning December 4, 2023, presented by Earnings Quispers. We are still a couple of weeks away from the holiday and year-end slowdown for earnings releases, with about 100 companies set to report this week. The focus will be on technology and retail, which have seen recent strength as these smaller companies have outperformed their larger peers that reported previously. GitLab will be the focus on Monday, and after reversing 2 quarters ago, the stock has had resistance at $55, with the stock nearing this level now on the backs of strong results from its peers. Still, investors remain bearish and analysts are mixed going into the news. The trade is likely in the direction away from this line following earnings. On the other hand, there is little evidence government spending is going to slow anytime soon, which means SAIC remains in the sweet spot between defense spending and technology demand. Investors will focus on NIO on Tuesday, with results coming before the open. So far, that $7 print back in June is holding as support, but if expectations hold true, then that support is vulnerable. Meanwhile, MongoDB is moving in the other direction as it flirts with breaking above the July highs. As a general rule, you buy strength and sell weakness, which favors MongoDB over NIO on Tuesday, and, similarly, expectations support the database company. AI has been the driver of much of the software rally of late, but C3 AI has lagged even as it rounds out a gap fill from last quarter. The keyword from cloud and AI software companies so far has been stabilization, but checks have been weaker for C3 AI than its peers, and that suggests the stock will continue to lag. On the other hand, short interest reached a peak during the quarter and remains above 35% of float. Speaking of a potential short squeeze, the dumb money appears to be back with volume spiking on a strong move higher in shares of GameStop last week. All the same fundamental trends are there, except for the fact that the company reported solid results 3 quarters ago and earnings have been trending higher throughout the year even as the stock has traded to a new low. Assuming this trend continues, it creates a divergence that supports the stock from here, with $15 starting to look important. Fun fact though, GameStop switched from reporting third-quarter earnings in November to reporting in December, starting in 2019, and, since then, the company has yet to trade higher after reporting third-quarter results and has averaged a gap lower of 10.5%. Though the moves have gotten smaller each year, with only a 1.2% gap lower on earnings this time last year. Broadcom didn't exactly report strong results last quarter, and earnings estimates have been revised lower since. Yet the stock pushed above 900 ahead of earnings on AI expectations and is now retesting this level, but there are still a number of areas of weakness, which makes $900 a potential inflection point for the stock. The move in Lululemon is becoming stretched, but in an environment searching for growth, the company is one of the few retailers seeing strong demand and pricing. Short interest has doubled recently, as the stock pushed decisively above the 400 level, which has more to do with normal positioning, as the stock was included among the S&P 500. But there still appears to be a number of people on the wrong side of this move, as the stock nears its 2021 high of 485. There are currently only 2 companies with analyst coverage scheduled to report results on Friday, but we have limited data on Johnson Outdoors. It isn't like there is an abundance of analyst checks and data read-throughs for Hello Group either though, but there is an expectation for the company to beat estimates. The key will be guidance though, which was weak last quarter, and we've gotten more weak guidance than positive out of China names recently. Options are priced for a large move in Planet Labs when it reports results, which are expected to be weak, but this is a $2.50 stock, which makes that volatility less reliable. Otherwise, the biggest expected move for the week is Yext, which is just a $6 stock, so still room for error. On the other hand, the stock traded higher by nearly 40% when it reported earnings back in June, and it traded lower last quarter by nearly 30%, so perhaps it isn't a stretch. A 30% move higher would fill the gap from last quarter and create a strong reversal, but its 2022 low is nearly 40% away. Thus the surprise would be a small reaction to earnings.
Shh.